If you are a new startup or small business owner, have you ever wondered why you get asked numerous questions and get asked for numerous pieces of identification when you form a new limited company, at least here in the UK, and open a business bank account? So welcome to the world of anti-money laundering, something that's not particularly glamorous or sexy, but definitely worth understanding in a little bit more depth. So here's the following things I'm going to cover in this particular video. So what exactly is money laundering and how does it work? I'm going to use a simple example to help illustrate it clearly, enough at least. Why accountants, solicitors and art dealers are classified as what's known as an obliged entity, anti-money laundering checks for micro and small business owners like yourself, and finally, why does anti-money laundering legislation actually matter? So as always, please, before I get into today's video, be sure to visit our Accounting and Tax Academy membership area where you can get access to exclusive in-depth courses, templates and great resources. Here's a lovely stat for you. According to the Home Office here in the UK, they estimate that the amount of money laundered in the UK or through the UK could be between 36 and 90 billion pounds a year. Now, just to put that into context, that's the equivalent of, at the high end, an estimated £3,000 per year per UK taxpayer. But what exactly is money laundering? So judging by the title, it sounds as though someone is putting money into a laundry washing machine and taking out fresh smelling, albeit soggy notes. Money laundering can simply be defined as a criminal practice of making funds from illegal activity appear legitimate into the legitimate economy. So I'm going to use a very, very simplified example to try and help illustrate the concept. So let's say there was a person dealing in illegal drugs, has generated millions of pounds in cash, stashed literally under their bed. The dealer then approaches an accountant to open a new limited company under a legitimate trade, let's say Super Web Services Limited, under the guise of web development services. Once the limited company has been created, follows through to open a business bank account. A few months down the line, several instalments of large amounts of cash have made their way into the business bank account, disguised as web development services. That is, services provided by Super Web Services Limited to a connected offshore person, complete with an issued invoice. So in essence, this is the first stage of money laundering, known as placement, where the illegal funds enter the legitimate financial system, in this case the UK business bank account. The next stage is then what's known as layering, where the drug dealer, let's say, makes several complex transactions. So an example could be, once the funds have entered the legitimate financial system, the drug dealer decides to buy a commercial property through Super Web Services Limited. And the aim of layering is to create as much distance between the ill-gotten money and its true original source. And then finally, the legal funds can be said to have been integrated into the legitimate financial system. Now, this is a very simplified example to get across the principle as to how money launderers could go about washing illegal money, perhaps even do go about washing illegal money. Imagine if there were no checks during this journey, how easy it would be for illegal money to enter the legitimate finance system and then circulate. And that's where anti-money laundering and combating the financing of terrorism laws and practices kick in for the likes of accountants, solicitors, banks and other obliged entities. So what is an obliged entity? So in simple terms, it means the entity must comply with anti-money laundering regulations and be able to evidence adequate controls and procedures for prevention. An obliged entity can be broadly split into the following categories. That is, firstly, there are credit and financial institutions. These are institutions such as like your banks, building societies, payment service providers who, as we know, handle large amounts of money and funds. So these guys are regulated here in the UK by the FCA, that's the Financial Conduct Authority. And then there's the accountants and tax service providers, solicitors, company formation agents, just to name a few. So in the case of accountants, it's probably less to do with the handling of funds and more to do with the ability to, say, set up shell companies or other legal entities that can help money launderers mask and channel their illegal funds through the financial system. So, for example, holding companies can be alerted as a shell company and as a result often raise more questions during the process. So holding companies have been used for money laundering, so don't be surprised if you are trying to create one here in the UK at least, your bank asks you a load of questions over and above the normal level of questioning. So even art dealers, casinos and estate agents fall within scope of AML rules here in the UK. Pieces of fine art are very attractive to money launderers, high in value, easy to stored privately and fairly simple to sell on in a private world. Each obliged entity is required to have what is known as a MLRO, that is a money laundering reporting officer, whose main duties are to ensure adequate anti-money laundering policies are in place and internal controls are within the organisation are as robust as possible. So they are supervised by a regulatory authority. So for accountants, this is normally their industry body, such as the ACCA or ICAW, here in the UK, who supervise accountants on behalf of HMRC. You can see on screen some of the supervisory bodies listed out here by HMRC. So when you start a business and want to create a new limited company, for example, what checks need to and most probably will be carried out on you or your business? So this is called the due diligence process, a term you've probably heard before. So speaking on behalf of accountants, we need to do what's called AML, anti-money laundering filtering. That is conducting routine checks such as taking your photo identification, a copy of your passport or driver's license as an example, and often proof of your current residential address. So this should be the same for your company formation agents if you use one of these to open a new limited company. Then, as well as keeping your ID and proof of address documents on file, accountants could also carry out an electronic AML check like shown on screen. This involves a check of your residential address against the electoral roll, date of birth match, whether you are a PEP, that's a politically exposed person, or are there any international sanctions against you. And when you move on to opening a business bank account for your newly created limited company, as they are FCA regulated institutions, more checks will be made, quite often in some cases in far more depth. Now, the thing here is that all these checks can feel somewhat onerous and intrusive, and I guess it can also feel like a load of red tape, and that's fully understandable. I mean, after all, you're just a new startup or small business, perhaps a 1 or 2 person setup, and just want to get on and run your business so you can make a living, and rightly so, understandably. But unfortunately, the flip side to this is that's exactly how some money launderers can also present themselves too. They also rely upon corrupt or ineffective service providing accountants, solicitors, banks to some degree with weak AML controls. Now, the societal issue of money laundering may divide opinion, and I'm by no means suggesting that my view and my opinion here is something that you necessarily share. But ultimately, the real cost of money laundering is, as a result of illegal activities, is often borne by the society in which we live and wider general population. Once a drug dealer gets richer and stronger, their actions are probably ruining lives in our very own society. By not having anti-money laundering rules and practices in place, this then further fuels the drug dealer's activities, causing more addiction and ruining more lives, which then has a ripple effect on families, the health sector, the local community, and no doubt society as a whole. Here in the UK, the National Crime Agency are responsible for pursuing organised crime, including money laundering activity, and state quite clearly on their website that money laundering has the potential to threaten the UK's national security, national prosperity and international reputation. So the question is, would you much rather your accountant, solicitor or bank is fully compliant with anti-money laundering checks, even though sometimes they can feel onerous? So any illicit activities and funds can be suffocated, if not stopped, at or prior to the placement stage, where the prevention of money laundering is probably the most effective. So comment below and let me know your view on this. This is Tony D'Angelo for the Accounting and Tax Academy, and as always, thanks for tuning in.